everybody. My name is Donald Clip, co-founder of America Mortgages and Global Mortgage Group. We are the only U.S. mortgage provider outside of the USA, focusing only on non-residents who are foreign nationals and U.S. expats living overseas. We're super excited to have a conversation with our next guest. But before I introduce you, we're going to be talking about their journey on U.S. real estate investing. We've been talking about the benefits of U.S. real estate investing for many years now. But once you hear it from an actual practitioner who actually quit their jobs and are doing this full time, the story is much more interesting. Now, stay till the end of the webinar where I will talk about our loan programs, and we will open it up for Q&A so you can ask questions about anything U.S. real estate related, investing strategies, the market, and of course our loan programs. So please stay till the end. So with that said, Teo, Tracy Pah.
Hello, everybody.
Hi, everyone. I'm Tracy. Together with Han, we are so excited to be here with American Mortgages and Donald. So just a little quick intro about ourselves. Han and I, we are Singaporeans. We were born in Singapore, grew up in Singapore, studied in Singapore. We are full-fledged Singaporeans. We have always wanted to achieve financial freedom, but it's very difficult to do so with Singapore properties due to the very high costs. So we actually started to research all over the world where it would possibly make the most sense. And I will share with you the juicy bits later, but we decided that US properties made the most sense, and therefore we dove into this journey to collect more and more US cash flowing rental properties to reach our financial freedom. Han, you want to say a few words?
Yeah, first and foremost, we are very thankful for American Mortgages, Donald and the team, to invite us, to allow us to share on this platform. And we also thank all of you here for your time to participate despite your busy schedule. And I hope our sharing today can add value and offer you a very different, viable, alternative way to grow your wealth and to achieve financial freedom. So without further ado, let me get started, all right? So take a look at the slides here. I'm Han and Tracy. So we are co-founders and co-hosts of Bite Size Investments. We are the only education and consulting company teaching international real estate investors to buy US cash flowing rental properties. Both of us came from average salary jobs, but managed to quit our 9-to-5, all thanks to our portfolio of US cash flowing rental properties, as you can see in the slides, right? We own 12 properties at the moment, almost all bought remotely from Singapore. So a little bit more about ourselves. So I came from a low-income family, all right? My dad was a taxi driver and my mom was a bookkeeper. It was tough growing up because my family didn't have much. I had half the pocket money compared to my peers in school, and I had to learn how to stretch my dollars. So at work, I had to endure 24-hour shift on weekends, and after the shift work, like on Monday, without any break, continue my 9-to-5 jobs, right? So life was really tough, and I realized that I was working hard for money and not the other way around. And I neglected my families and friends, and I actually did not enjoy it. So this motivated me to find out more meaning in life and to find financial freedom.
Yeah, for myself, unlike Han, I grew up in an upper middle class family, but because we didn't need to worry so much about money, right? I grew up following the system. I call the system the conventional way that people think life should be, which is go to school, find a field of study that ensures good employability, get good grades, get a good job, find a stable job, stay there all the way until you retire. And in the Chinese context, they call it the iron rice bowl. So people think that once you get the iron rice bowl job, you're set for life. So I would say I was very fortunate that I managed to do my postgraduate studies in the US, and I was there with my sister. So while we spent that 1.5 years just touring around US with not a care in the world, I mean, we cared a little bit about our studies. We passed, but I think that was really, really the first taste of freedom that I ever felt, to have freedom of my time, to do what I love without having to report 5 days a week to the office. So I just want to highlight that Han and I, both of us, have no background in finance or real estate. Han was a physics major and I was from electrical engineering. So when I came back from US, I told Han, hey, okay, I know you always talk about financial freedom. I also want to have freedom of my time. What should I do? And he recommended 2 books to me, Robert Kiyosaki's Rich Dad Poor Dad, and also this one, Cash Flow Quadrant. So I went to read them. And oh my God, my mind was blown. Like, where has this book been all my life? It is just crazy and enlightening. So Robert Kiyosaki talks a lot about achieving financial freedom through real estate. But more importantly, I think this book really changes your mindset about how you think about money, life, employment, being a business owner, being an investor. And, for someone like me who grew up being told by my parents that debt is bad, stay away from debt your whole life, this book taught me how debt can be good, like how debt can earn you more money and accelerate your progress towards financial freedom. And by the way, American Mortgages gave us a lot of good debt to scale on our journey, right? We'll share with you some real examples later. So what is financial freedom? Financial freedom is where your passive income is more than your living expenses. So what is passive income? Passive income is money that comes into your bank without you needing to spend time at a job. So for example, rental income. Every month, your tenant pays you the rent, even though you don't need to report 5 days a week, 8.5 hours a day at a job. So that's called passive income. So once all this passive income covers whatever you spend on, right? Your food, your insurance, your transport, then you don't need to spend time in a job anymore. You don't need the job anymore. And that's when you achieve financial freedom. And let me show you what financial freedom has done for us. So this is in no way to show off, okay? I just want to motivate you guys and show you guys that it's really possible, that just 4 years ago, Han and I were getting zero passive income and zero properties. And we were like, we didn't even know where to start. And in just 4 years' time, right now, every month, we collect about US $15,000 in rent checks. That's about Singapore $20,000. Yeah, round of applause for us. But again, this is in no way to show off, all right? I just want to show you it's really possible. And as mentioned, we both came from average salary jobs. So financial freedom really allowed us to turn our dreams into reality. With the passive income, we can travel. We're not limited to our 18 days of leave a year at a job anymore. We can travel for a few months, different places, and all this time, our rental properties are still paying us while we travel. So in 2024, we're going to do something new and exciting, to us at least. If you look at the bottom right-hand corner, there is a van that we bought. We're going to retrofit it into that sample picture on the right-hand corner so that we can travel and live in the van. Plus, we installed 2 passenger seats so our family and friends, if they come along, they can go for a ride. And to us, it's really a dream in the making because we had planned for this for so many years, and now we finally achieve it because we have collected sufficient cash flowing rental property. So really, really turns your dream into reality. Okay, so I know a lot of you will be thinking, why did we choose the US? Don't worry, I will share. But first, let's let Han share some of our recent purchase numbers to show you what it's like with US properties.
Yeah, I mean, looking at the pictures, it got my heart pumping quite fast, but get me excited, and that's the true meaning of life, right? So anyway, take a look at this picture. That is a 3-bed, 1.5 bath, 1,300 square foot single family home on a 5,000 square feet land with nicely done up interior finishing, as you can see on the picture on the right. In my country, such landed home would cost upward of a few $1,000,000. But this was how it actually looked like when we bought it. It was distressed, dilapidated, and ugly. But such ugly houses are actually opportunities for investors, right? Why is it an opportunity? Tracy will share with you later with some maps and charts, okay? But now let's take a look at the numbers. We bought it for, guess, drum roll, $142,000, and we spent $42,000 to fix it up. So our all-in cost is about $185,000. right? So we also know at the same time that the same type of properties in around the area, right nearby, was selling for $230,000 when done up nicely. So what will happen to our property's value when we get it fixed up nicely? It's no brainer, right? It's going to be at least in around the area of $230,000. But our all-in is only $185,000. So we made an instant $45,000 of paper gain. So at the same time, we rent it for $1,800, and our net rental yield based on the 70% loan to value will be about 16.6%, right? Is that good or great? Yeah. So anyway, let Tracy share with you more about what are the other qualities we see in when we invest in US real estate.
Yeah, so we share this so many times with our friends, but we're still very excited every time we share. So why US? I mean, obviously we want to retire early. Our goal is financial freedom. So we need assets that pay us, not the other way around. Right? So why didn't we invest in Singapore, our hometown? Let's take a look at this. I'll call it a fictitious Singapore condo, right? We'll just call it Anton Park. So a one bedroom costs about $1.2 million. Down payment is about $300,000. And this is the kind of property that a lot of Singaporeans buy as an investment because one bedroom is the lowest price point to buy a condo unit. Now, your monthly mortgage payment will be about 4.2K and the rent is about 3.5K. So, I mean, the rent cannot even cover the mortgage, and this means that this is a negative cash flowing property. And now you throw in property tax as well, and didn't even add in repairs, vacancies, appliances, and whatever not, right? Every year, just based on the mortgage payment and the property tax, you are bleeding or you are paying the bank $13,000 a year instead of the property paying you. All right, this is called negative rental yield. So why is it negative? It's because the property price is just so high. So the mortgage payment is very high and the rent just cannot cover the mortgage payment. So the landlord, which is the investor, is working very hard to pay for the asset and hoping that it will appreciate enough to be able to sell it and make back, firstly, all that negative cash flow over the years, and secondly, to make a sizable profit out of it, right? It becomes you buy, you pay every month, and then you hope that it appreciates, and then you make something out of it. And if you want to retire early on passive income, how many of these can you buy to quit your job and live off passive income? It's just impossible because everyone you buy is a negative cash flow. You're never going to quit your job collecting properties with a negative cash flow, right? In fact, you need to work to earn the income to top up to pay the bank the extra for the mortgage. Now let's take a look at a typical US property that we buy. In the middle photo, there's a house on sale. It's about 180K, right? Similar to the one Han shared. And then on the right, this house on the same street rents at about 1.7K a month, or I would say 1.8K a month. So do you realize that just two of these properties can fetch you about 3.5K of rent a month, which is same as the Singapore Anton Park. So just two of the US houses to fetch the same rent as the Singapore property. And how much would two of these US houses cost? It's less than 400K, right? 180K times two, 360K, compared to $1.2 million for Anton Park. So you really spend a lot less when you use US properties versus Singapore properties where we are. In that sense, we are making our dollar work a lot harder for us, right? We're getting more bang for our buck. And for Singapore real estate investors, you may have heard of asset progression. This is where you invest in the house that you live in. So like you start with a HDB, right? And then you wait a few years, earn a bit of income, let it appreciate, you sell, and then you upgrade to a bigger house, maybe a condo. And then after a while, you sell and you just keep upgrading to build your net worth. But all this time, because you're living in it, it's not giving you cash flow. You are working hard to pay the mortgage. And as you upgrade to a more and more higher class, you're paying more and more mortgage. And that keeps you locked in your job, right? And then after that, at the end of it, when you want to retire, you downgrade. So when you finally want to enjoy life, you downgrade. So this is not a strategy that you can use to retire early. Whereas for US real estate, they cash flow. So every property you buy pays you, adds to your income. And you can use this cash flow to fund your lifestyle, and that's why you can retire early. On top of that, US properties are freehold. So you just collect, you hold them forever, and then you can pass them down to your kids and even your kids' kids, right? It's very common to see 100-year-old properties in the US being done up very, very nicely and passed on and on for generations. I mean, can you imagine how it would be like as a child if by the time you graduate from school, your parents hand you like 20 cash flowing properties? I think life would be so much different for them. And another reason is that US also has imperfect housing market. Let me show you what these kind of opportunities are. So these are the sale transactions in a certain neighborhood in the US. You will see that some are sold very cheap, like below 100K, whereas right next door, the house can sell at 200K, even though the house looks almost exactly the same. Why? It's because of distressed sellers, distressed homes, like the one that Han showed you, the one that we bought. It was distressed, needs a lot of renovation. And when houses need a lot of renovation, nobody wants to buy them. So the seller will just mark them for cheap. You go in as an investor, you buy them way below market value, put a bit of money, fix it up, and straight away, the valuation jumps up to what it should be, what all the rest on the street are. This is called forced appreciation. So in Singapore, what investors do is they buy and they wait for years to happen, wait for market appreciation to occur. But in US, we use forced appreciation. Even before you buy, you already know how much it can be appraised at after you fix it up, right? And we force up the appreciation. And in the US, information is very, very accessible. So it is very easy for you to find the sales around the area, the rents around the area. All right. So yeah, this creates opportunities for forced appreciation, our favorite kind of appreciation. And lastly, this is a very important point. Good debt, right? Good debt versus bad debt. US is the only place in the world where you can get 30 years fixed rate mortgage. That means if the market rates go up, you don't do anything, keep your rate. If market rates go down, you can refinance down to the lower rate and then lock it in for 30 years. So I think a lot of our fellow Singaporean friends during the COVID time when interest rate after COVID, when interest rates started to go up, then they really felt the pain of refinancing at a higher rate. But for US 30-year fixed rate, you don't need to worry about rates going up, right? Rates go down, you refinance down. Rates go up, you just don't do anything about it. And as investors, that is so important because you reduce one variable in your long-term equation. Also, for the loans in US, you don't need to show your personal income. Why? You think about it. Why does your local banker ask for your income when you want to buy properties? It is because they know that the properties rent cannot cover the mortgage to pay them back. So therefore, they want to know your personal income to top up the rent to be able to pay the mortgage, right? But because in US, we have cash flowing properties. So the bank knows that the property can pay for the mortgage plus the property taxes and insurance and what have you. And therefore, they can approve loans without seeing your personal income. So linked to that, for the US loans, we don't have TDSR, MSR. This is total debt service ratio, mortgage service ratio, right? Because the loans are tagged to the property and not you. And because of that, you can take unlimited number of loans. Imagine you want 1,000 houses. As long as each of the 1,000 houses can earn enough rent income to cover each of their loans, by all means, take 1,000 loans, right? It's not tagged to your personal income. And lastly, there is no age limit for taking loans in the US, all right? This is due to their Fair Housing Act. So even if you are 99 years old, you can still take 30-year fixed rate loans. So how cool is that? So this is just a summary. I'm not going to go through everything. It's just too much to talk about, but feel free to like take picture, print screen the page, all right? This is all the pros and cons of Singapore versus US. I just want to highlight there's a few new things here. Like US has higher rent demand, which really forces up rent growth. Okay, we'll talk a little bit more about this later. There's no cooling measures like in Singapore where the government is trying to tell you, hey, stop investing in properties. I'm going to slap all these measures on so you stop investing in properties. The US, on the other hand, is like, come and invest. I'm going to give you tax benefits, a lot of benefits for you to invest in properties. And lastly, a very powerful strategy that we use is where you don't need to sell your home to monetize the appreciation. there's a way to take the money out without selling the home. All right, I'll let Han explain more about this.
Yeah. So how do you sell your house without selling your house, right? So let me show you. Take a look at this 4-bed, 2-bath, single-family home that we bought for $79,000, and we spent about $16,000 to renovate it. So the total capital investments was about $95,000. Yeah. So then after we finished renovating, the property was appraised at $170,000. So obviously we gave a call to Donald. Said, "Hey Donald, can you give me a loan?" And Donald said, obviously he said yes. And then he approved a 100K loan, taking this property, as you can see in the slides, as collateral. So this is called cash out refinance, where you go to a lender, take a new loan with the property as collateral, and put the cash into your pocket. You can do whatever you want with it. So can you see what is happening over here? We paid $95,000, and then how much did we get back? We get back $100,000 as a loan, right? So did we pay for the property, or did we get paid buying the property? So we got paid $5,000 to buy the property, and then when we realized this, it instantly blew our mind. Like, it was a mindset change, and we now see things very, very differently already. We got more cash than what we put in, and it's still cash flow because the rent can cover the mortgage. So, and when we do investments, we talk about ROI, right? So what is the ROI for this deal? Think about it. You take your returns, which is our monthly cash flow, right? And we divide by the amount we put in. But in this case, if the amount we put in is zero, which is our denominator, what does it mean? Our return becomes infinite. It's off the chart. It's not what 10%, 20%, and everyone say, well, I got 20, 30% is a guru already. But then we got it more than that. We got it off the chart. So yeah, I don't know, is it good or great lah. So anyway, we got the 100K from Donald, and what do we do with it? All right, we buy another property. We repeat the process over and over again. We use the cash out money from the previous property as down payment, and then we call Donald again and say, hey, we need another loan to buy this property. So as you can see, we bought this property without a single new fund in, right? So this is how we scale from 0 to 12 properties, and we aim to repeat this every year over and over again, and sort of like double and double and double our portfolio. So this is how you can sell your property, monetize the appreciation without actually selling it. So then you can continue collect your rent, enjoy future appreciation, and then once it appreciated enough, give Donald another call a few years down the road when the property appreciates. Okay, so one more thing I'd like to share with you. It's called rent growth. All right, we bought this 3-bed, 1-bath single family home for $90,000 in 2021. Our rent then was $921, and it cash flow for $300 per month. Right, so this is very normal in the US. Then how do I say? Over the years, we managed to successfully push rents up from 900 to 1,000 to 1,003 to 1,004. Right, so this is very normal in the US, as Tracy has shared. Because inflation and capitalism is baked into the daily life. Landlord does it, tenants accept it. So rent has been slowly growing forever, as you can see in the chart on the bottom right side. Whereas in places where it's dominated by a lot of homeowners, let's say like Singapore, rents sometimes can stay flat for a very long time, as you can see in the bottom left side. Yeah, so to summarize, when we invest in the US, we invest, number one, for cash flow. But at the same time, we also enjoy appreciation and rent growth at the same time. So I hope this gets you very, very excited at the potential here. And if you are excited how to get started, Tracy will share with you.
Yeah, so if you want to get started, obviously we can't share everything in this short session, but we do have a free webinar coming up. The next one will be on January 31st. All right, it is over 2 hours long, so we will share a lot more information there, and there's also open Q&A where you can ask us anything that you want. All right, in our webinar, we will explain 4 core investing principles when you buy properties, no matter where in the world. The first one is how you avoid money pits, avoid properties that eat your money rather than pay you. Second one is how we buy properties for not only cash flow, not only appreciation, but cash flow and appreciation. All right, I invite you to join us at our free webinar. Then you can find out all about the other two core investing principles. All right, you can scan the QR code on the bottom left side. And then feel free to take a snapshot of this page so that you can slowly scan the codes later. And we also have a YouTube channel. It's called Bite-Sized Investments. Here is where we give a lot of free content. So yeah, feel free to subscribe and enjoy our free content, all right? At the same time, we also do have a remote cash flow rentals masterclass. Here, we really jam-pack a lot of information as much as we can. So why did we start this masterclass? It's because due to our very unique circumstances to invest from so far away, we really did not know anybody else doing it. And we had no guide, nobody to follow, no role model. So we really spent years of blood, sweat, and tears building up all the processes, building up our teams over there. And we really think US properties are very powerful and it can be done from anywhere in the world. So we designed this course for international investors, right? People outside US who want to start buying US cash flowing rental properties using proven data-driven methods to find these properties. So we will teach you things like how to pick markets, how to evaluate your rentals, who you need in your team, how to buy remotely, how to manage remotely, and even how to sell remotely. Plus, we also threw in some complimentary guides and also free live group coaching sessions because it's very important to form a community, right? So we want to have these group coaching sessions for our graduates to be able to network with each other, with like-minded individuals. So it's basically everything you need to hit the ground and get running. Again, feel free to print screen this page. Don't hesitate to contact us on any of our social media or our email, admin@bitesizeinvestments.com. Okay, you can really ask us anything. We are very friendly. All right. Okay, it's time for our next exciting session. So remember how I spoke about good debt and US having fantastic loan benefits? So I shall end my shameless plugs here and stick around to the end for Q&A as I hand over to Donald now to talk about US mortgages.
Thank you very much, Tracy and Han. And by the way, I was just noticing that those properties you bought that were valued at $170,000 in 2020 must be much higher now. So it's about time you call me to cash out again, I think. So listen, I want to talk a few things. So the strategy that Han and Tracy are using is called forced appreciation. But there are many different strategies in the US to earn rental income. There's strategies where you buy where industries are moving to. A lot of that is Texas, Atlanta, Florida. There's strategies where you focus on university towns. So Han and Tracy are experts in a particular area, and I'm not going to tell you where it is because that's in their seminar. But that's what they've done. But there are many different strategies, but it all involves using good debt, which I'm going to talk about. Now, another thing I wanted to talk about is about the rental market, because this is really important because people don't quite understand how can rental yields be so high, and it's very simple. There is a lack of supply in the US, and that's well documented. Everybody talks about it, and everybody can feel it. And so the demand on housing is growing, supply is flat. So at the current mortgage rates, a lot of people can't afford to buy, so they have to rent. And that's why more rental yields now in many states are 10, 12%, and they're only going higher. And we can talk much more about this in Q&A. So I want to talk about our mortgage programs that are specifically designed for overseas borrowers. So I want to do a quick snapshot of the key points. One, US credit, US residency is not required. So this is the biggest myth that people have. They assume that, oh, I don't have US credit, I don't have residency, I can't get a mortgage. So that's not true. We accept your overseas income to qualify. We offer loans in all 50 states, and these loans can be closed in as fast as 30 to 45 days, which I guarantee you, if you went to a bank, first of all, you wouldn't be able to get a bank loan. Normal bank loans, even for US citizens, take months, okay? Everything we offer are market interest rates and practices, except that we're only focused on our international audience. Our loans allow you to purchase, allow you to refinance, and what Han does is to cash out of the equity. These loans are 30-year fixed, regardless of the borrower's age, like Tracy mentioned. And as a foreign national, you can borrow up to 75% of the home value. And for US citizens, up to 80%. And you can sign the closing documents at your local embassy. Many of these foreign embassies already know us because so many of our clients are going to the embassies to sign the closing documents. And we have a phenomenal approval rating. We approve 97% of the loan applications that are submitted. Okay, so let's talk about our 4 main loan programs. The first one is our most popular loan program, and this is what Tracy mentioned. We call this the AM Rental Coverage Program. And what that means is that if the rental income of the property covers your mortgage payments, you qualify. No personal income is required. And of course, there's no US credit required, residency, and our loan amounts are from $150 to up to $3 million. Like all of our loans, they're 30-year fixed. We have interest-only options available, and these can be closed in 30 to 45 days. Now, I'm going to have a visual of this, of what I just said, was if you're expecting to receive $2,400 in rental income, and your total mortgage payment is $2,400, you qualify. It's as simple as that. And in a market where rental yields are going up, it's actually becoming easier and easier to qualify. The next loan program is called AM Investor. This is a standard loan program which uses your income to qualify, except what makes us unique is we allow your foreign income, okay? We don't require tax returns, and you qualify using an income letter from your employer or your accountant. All the other information is very standard. There's no US credit or residency required. The loan amount's $150,000 up to $3 million. Again, 30-year fixed, interest-only options are available, and up to 75% financing for a foreign national. So here's a visual, and this is a standard debt-to-income ratio of all banks and lenders in the US, which is if your personal income is $10,000, so 43% of that is $4,300. And if your total mortgage payment is $4,300 and your gross personal income is $10,000, you qualify. It's as easy as that. The next program is targeted at US citizens living overseas. Many US citizens, they start to work overseas and then they stay there for a very long time. And in their mind, they think, God, I don't think I can get a loan anymore. I've been out of the US for so long, although I still file US taxes. But yes, you can. So these loans are exactly like you would get in any bank in the US. You qualify on your tax returns, no US residency required. You have to have a US credit score of 680 or above, which is very common for many people. And loan amounts 150,000 up to 5 million for a US expat, and closing times 30 to 45 days. And the next visual is basically the same as the previous slide, the standard debt to income ratio of 43% of gross income. Now, this one I'm particularly excited about. We created this last year, and it's one of our popular loan programs. So we noticed in our conversations that a typical journey, and this actually was my journey as well, in Asia, your child gets into a school, and what you want to do is you want to buy a condo near the school because maybe you don't want your child to live in the dorm too long. And when you go visit them, you don't want to pay the high hotel prices. So you buy a condo and your son or daughter stays there. When you go visit them, you stay there. Now, the trouble is no bank in the US will lend to a student because he has no income. And no, the allowance you give them doesn't count. But actually, this loan program, this is what we do. As long as the student has a F1 visa, you qualify on the projected rental income of a comparable, okay? And this allows you to help build the child's U.S. credit at a later date. And again, all the other points are very similar. So here's a visual. If the gross rental income of that of a similar property is say $2,400 and your total mortgage payment is $2,400, you qualify. And this is fantastic for families who want to buy homes for their kids while they're going to university. Okay, so here's our contact information. We are a U.S. headquartered firm. Our international headquarters is in Singapore, and that's how we met Tracy and Han. But we have offices and representatives all over the world. We like to say we're open 24/7. There's our QR code. Please, scan it, take a screenshot, download the information. We're going to be around for a little longer. So I wanted to say a few housekeeping items. One, we're going to open up the Q&A very soon. But the copy of this presentation and this video will be edited and sent to your emails in about a week's time. So please look out for that. So with that said, let's open up for Q&A. All right. Oh, there we go. Okay, first, so I'm going to read the questions. Is it risky to buy properties remotely? So that's one for Han and Tracy because they do it.
Yep, Han, you can talk
I mean,
about it.
Yeah. Of course, it is risky to buy properties remotely. It's just like it's risky to take a plane. It's risky to cross the road. But I think eventually there are risks involved. But the question is, do you have the risk mitigation framework involved to mitigate the risk? So what are some of the typical? I mean, we started this journey. Before we even buy, we shared with a lot of our close friends and families. So then obviously everyone cares and loves for us, so they will say all the risk that is coming. So and we embrace all these how do I say, sharing and concerns, like the typical, hey, you buy already, you cannot sell how? Hey, you buy already, then you cannot rent out how? All these kind of questions. But then so we took time to slowly, one by one, go and address them and put in place steps to mitigate. So like for example, like if cannot sell how? So the thing is, if we bought a place like in rural area, you drive half an hour also cannot see the next so one, yeah, then there'll be a bit of challenges. But if you go to a place where it's bustling, growing economy, thriving, people will always come in, and then when you put the house on the market and you want to sell it at a correct attractive price, it will get sold in, like, very very fast one, like 2-3 weeks or maybe 1 month at max. Yeah, then this is the type of markets that we want to be in. So we go about addressing all the different risks. So, and obviously there's a lot of things involved, and that's actually what it's not a shameless plug or whatever, but that's exactly what we share in our webinar, our course. We address all the risks. We ask people what are the risks. They say all of them, and then we have all the steps to mitigate the risk. Yeah. So this is how we address the buying properties remotely, the risk of buying properties remotely.
Yeah, if I were to add, because like earlier I shared, US information is very, very open. So it's very easy for us to do a lot of research upfront to find out, things from median income to crime rate to natural disasters. And about risk identification is just about finding out the risk, right? Finding ways you can first use to avoid the risk. If you can't avoid it, how can you mitigate it? You can't mitigate it, how can you ensure and protect against it? So it's really the same like project management anywhere. And that's the kind of data we actually use to choose the right markets to, ensure that we get a strong tenant population, we get a growing population and stuff like that. Yeah, that's how we mitigate the risk.
Yeah, like nothing in life is easy. I know. I think if you sign up for their webinar, the journey wasn't easy. They're obviously very super friendly and very upbeat, but the journey, like any journey, is tough. And now they've got into a good routine and they feel more comfortable about doing these things. And you're just talking about identifying markets. There's so much information out there, and the U.S. really has something for everybody, right? They've got lower price units, higher price units. But the key to, if you think about capital appreciation, like Tracy said, we've all been lucky. Interest rates have been low. Everything's gone up, right? So have you been smart by doing that? Well, rising tide lifts all boats. But capital appreciation is a hope. Rental income is math. If the numbers work, that's how you do it, right? And yeah, so that's kind of what I wanted to say about that. What drives property prices are basically just a few things, right? It's population growth, right? And what is that? That means, are people moving to that city, and why? That could be a university, it could be a new car manufacturing plant. So those are things you need to research, right? Another factor is schooling. And does it have good schools? If I can't afford to live in California, I looked at the cost of living in Texas or Ohio or Michigan. And the first thing I'm going to do, like we all would, crime rate in that city, best high schools in that city. So these are some of the things that if you think about it as a business, if you were opening a restaurant, you'd have the same thought process, right? So that's kind of the mindset. And the US has tons of information. Okay, next question. Hi, Han and Tracy. How do you manage the properties from Singapore?
So in US, hello, I'm not sure you're from Singapore, but I know in Singapore there is no such culture as like a property manager. So in Singapore, I think the real estate agent acts as the property manager, right? Means they are the one that handle communications with your tenant and stuff like that. But in US, property management, I think it's the same for some other countries, UK, Australia. Property management is a profession where they need to be qualified, and then they have a property management companies are set up solely to manage properties for investors. So they do everything for you, from getting it turned, doing the repairs, doing the leasing, screening your tenants, putting the tenants in, getting the lease signed, collecting your rent every month, sending it to your bank account every month, and then collating the bank statements for you every month, every year, so you can check. So I guess for starters, that is the best way to say how to manage your overseas properties, right? Find a good property manager, one that you can vibe with, one that you can trust, and then get them to manage the properties for you. Normally, they will take, it varies from state to state. It could be 8 to 10% or 8 to 12% of your rent every month to them, but they really are your hands and legs. And us being like in a 12-hour time zone difference, right? We don't want tenants to be calling us in their day, which is our middle of the night, to say, hey, the toilet bowl is broken, and hey, my shower water won't come out. We don't want to handle all these things. So yeah, having a property manager can help you handle everything on the ground. And all you need to do every month is to collect rent and also check your monthly statement. Just make sure they got everything correct in there.
Yeah, I can add to that a little bit as well. Even if you get a handyman that comes to your house to hang paintings or fix something, you may not like the job they've done the first guy. So you get another guy, right? So it's like having your own business. Or a restaurant, like if you have a chef, you have a waiter, you have some other staff, those components are your team. They're your staff almost. And it takes a while, right? And you never get it right the first time. Maybe you do. But those are components of being a real estate investor. We actually have property managers as partners that we can introduce you to. Han and Tracy have one that they're comfortable with. So this is, a trial and error process.
So
Okay.
I would like to jump in.
Go on.
I'd like to jump in on this question also. So I would want to share is that most of us, like what Tracy said, in Singapore, there's no such thing as property manager. But when we invest in US, because we're actually riding on their existing infrastructure. US is very big, and not everybody, like if I live in California, I don't only invest in California. I, as a US citizen, have the option to also maybe buy in Florida or buy in New York or buy in Michigan, for example. And we don't like it for the California investor. They don't fly over there to do it. So they use existing property management companies to manage their property. So this is a known infrastructure for the locals to ride on. So what we actually do is, so what they do is out of state investing like that. So then what we do is we're just taking this way of investing and we put a steroid, take it 12 hours time zone apart and maybe 10,000 miles apart. We are just riding the same infrastructure and then use the property management. So it's not something that is new that you have to go there and reinvent the wheel and find and to teach and to come up with all the processes. You just go there, go shop for it, interview, vet them, and use them, like them, continue using them, don't like them, change. That's all. So yeah, I just want to say that it's not something that's new and innovative. It has been here for many years already.
All right, I'm going to jump around to some of the easy questions to answer. Okay, so and then go to the longer ones. Can a non-US citizen buy real estate in the US? Are you both citizens? They're both Singaporeans. And again, this is sort of a common misperception. Did you know that over the last 10 years, foreign nationals have purchased on average $100 billion worth of real estate each year? And so let me say that again. Non-US citizens have purchased an average 100 billion, right? So yes, the US is it's a free country. Anybody can buy property. Okay, so and Tracy and unless something's changed in the last time we spoke, I'm assuming they're still Singaporean.
Yeah, we are pure Singaporeans. One passport only.
Do you have to go to the US to open a bank account? No. There are services that let you open a bank account remotely, especially if you're going to set up an LLC. Yes, there are banks that will allow you to open the bank accounts remotely. I think you'd best to contact us and we can kind of go through some of those options. How long is the pre-approval letter for? That's a really good question. So a pre-approval letter is basically a letter by the lender that says, based on the information that you've given, you're pre-approved. So when you use that to go look for a house and you show your realtor, listen, I've been pre-approved, they're like, okay. And once you find the house and you're in contract, then we can start the loan process. A pre-approval is usually good for about 3 months, or not about, for 3 months, unless the borrower's financial situation changes or other situations. As an expat, I don't receive a W-2. Does that impact the rate of no. These US expat loans are exactly like if you were going to a bank in the US. Now the question is the bank in the US going to spend the time to help you because it's a complicated, situation? But the answer is no, because you're working overseas. Why would you have a W-2, right? Unless you work for a US company, and that's kind of their policy. So it doesn't affect the rate. Let's see. Can you rent the property out to your children and still take advantage of the tax advantages? Yes. And we work with we refer our clients to tax accountants that specifically help overseas borrowers and foreign nationals. And again, I mean, I can't even tell you how many strategies that the US has to make your life easier to be a property investors. You can set up an LLC, put the properties in the LLC for, which we can get into the pros and cons, but you can deduct a lot of expenses in the LLC because now you're in the business of earning rental income. So as a business, you need to go fly there to see your income generating asset. So there's a lot of tips and strategies. Next one is, okay, so the interest rate for all the 4 packages, I mean, these things are moving around quite a bit. I would say they're probably high 7s to 8, but it really depends on LTV, loan amounts, but those are 30-year fixed. They've come down. So just to give you an example, if you're a US citizen, perfect credit, 12 months pay stub, work at the same company for 20 years, in the US, it's 7% for a US citizen. right? And with an incredible amount of underwriting. They go through your credit card statements and it's painful. Ours, not much more than that, and very little documentation because it's based on the income of the property. This seems too easy. What's the catch? Actually, nothing is easy in life. Tracy and Han are just very optimistic people. Like any startup, it's tough, but it only gets easier because you make some mistakes, you learn. So yeah. So US citizen living overseas, 20 years plus, no US credit anymore. Which program would you apply for? It really depends. Like, actually, you may have credit that you don't even know. I've been, I'm a US citizen. I've been away for a very long time, and I was even surprised I still had credit. So, it's best you speak to our loan officer. We can kind of talk about which program is best for you. I'm not sure, should I say that? I mean, I'll reach out to you directly to kind of answer those questions. What are the current interest rates for the first loan program? It's about 8% for 30-year fix. And as a US real estate investor, I think the focus isn't about the rate, it's about the profit. If you can get 12, if you can borrow at 8 and get 12, you make 4. Okay, fine. It's not as good as if you can borrow at 2 and make 12. But you know what? You're getting, you're getting 12% rental yield. You know what happens next year when you have to, like Han slide, oh, my rent's coming up. What's my new rent? Oh, well, it's no longer it's 1,500, it's 2,000. And you know what happens from a year from now? Interest rates go from 7 to 6, and so you refinance again at 30 years at 6. So now you've gone from 15% yield to 6, so you're now net 9. So it's all about making the numbers work. So, sorry, to answer your question, it's about 8%, give or take, 30-year fix for 75% loan to value. Wonderful presentation.
For now.
For
If
now.
interest rate moves, if interest rate moves, then
Yeah.
it could be better.
Maybe
Yeah.
I want to chip in a small one on this. Actually, I agree totally with what Donald is saying, that we shouldn't only look at interest rate alone, because a lot of our friends tell us, hey, interest rate so high in US, not good time to buy. But I can tell you from our real experience, right? During COVID, when interest rates are very low, the competition is crazy because everybody is buying and all the properties were selling over valuation. So what happens if you bought during the low interest rate time, you have been stuck overpaying for your property just to get that low rate, right? But ever since interest rates have gone up, we found it so much easier to get undervalued properties. And just 2 months ago, we closed on our last deal, and we got it more than 50K under value, even with the 8% interest rate. Because we got it so much under value, the mortgage payment is much lower, and the deal still makes us about 9% cash on cash return. So you really gotta calculate the numbers and look at it as a whole. Like people say Singapore interest rate very low. Last time during COVID it was what, 1%, 2%, but the property price is so high that even 1% is a lot. It's the price to rent ratio, right? Because US has a very I'll call it a high rent to price ratio, right? Means the rent divided by your price is high, your rent is higher compared to your price. So even with the high interest rates, because of the low property price and the relative higher rents, as long as it can cover your cash flow, just like what Donald said, you lock in the house first at the undervalued price. Interest rates can change. It's called marry the property and date the rate, right? Interest rates can change. When interest rates change, then you refinance now, but you have already locked in the property at undervalue. So I think this is a very, very common question we get about high interest rates being a bad time to buy. So I just wanted to share our personal experience that it's actually a very good time to buy.
One thing I'd like to add to that is, okay, so if you think about the supply of all homes transacted, right? About, I think 90-ish% are actually existing homes. So if you Google existing home sales, did you know that 80% of those that have a mortgage have it under 5% and 40% have it under 3%? Now, the way to look at it is like, oh my God, I wish I was one of those guys. But actually, if you think about it, if you need to sell your property now, right, you either need money, because if you wanted to buy another one, the interest rate is much higher, okay? And new home sales, if I'm a developer, I'm like, well, I don't know if I want to launch 1,000 homes in, Texas, because at the current interest rates, nobody can afford to buy my homes. So they've slowed down. And it's turned into a situation where, like Tracy said, if somebody's selling, you have pricing power, right? So, it's all these quirks about the market at the moment that make it a really good time, because it's all about making the numbers work. Listen, I'm going to quickly go through some of these questions because there's a lot. I'm a U.S. citizen for many reasons. Gone ahead and purchased a home tenanted with cash. Can you cash out refi? Well, that's exactly what Han does. So the answer is yes. For the AM rental coverage, how do you calculate projected rental income? Well, that comes in the appraisal. So every home purchase, every mortgage in the U.S., we have to order an independent appraisal, which will do a value of the home and a rental comp. If already have bought and renovated the property and it is rented, can I get a refinance? Yes, which is also what Han and Tracy do. So, you buy a home today for 100,000, well, let's just say $200,000, and then interest rates go down. Next year, they'll probably be $250,000. Then you refinance at $250,000. I'm going to give you another mind-blowing statistic. If I were to say, on average, 50 states, all property prices transacted, if I were to tell you that on average, property prices in the US were up 5% nationally, you would believe me, but that's a fact, right? And that's mind-boggling, right? And as part of this, there's just lack of supply. And actually, that's on average. So in some parts of America, we had a lady on talking about Irvine property up 20% last year. Parts of Dallas up 20%. So property prices are still going up, even though interest rates are high. Now, what do you think is going to happen when interest rates start to come down? So we all know the answer to that. Who pays the brokerage fee? So it's standard. You go to the US, everything we do is US standard. The borrower pays the broker fee, and it's on your closing statement. So it's super transparent, it's super regulated. There's a line item on the closing statement that says broker fee. Hans, you're based in which city in the US? What is the profile of the tenant in your property? I don't know. That might be part of their secret sauce. You might have to sign up for that one.
Yeah, exactly, Donald. Thanks for helping me take the bullet for this.
Yeah.
So we are doing education and coaching for our students. We do have a framework. So we are not focused on only one city. We have a framework of criteria to go through. So it's actually not one city, but many cities. So
Can
but
we
we have to be
say
fair with our
Midwest? Midwest is, yeah. Can we say that? Yeah.
Yeah, but
Midwest.
actually, I will put it even easier. It's places where there are high rent to price ratio. So where when you invest, then you get more bang for your buck for your rent. So it's not your gateway cities. So these are the things I'll say. For tenants, we usually go for the middle class tenants. We try to avoid the the lower income and the highest income, because why? When you take the sort of the demographics chart, you want right snap in the middle, because we want just one cookie cutter type of people that go to work 9 to 5, pay their rent, get their rent income, all these things that so we don't want too exciting, and we on both ends one. So we want people right in the middle where we get the highest volume, highest population. Anything you want to add, Tracy?
Yeah, maybe I'll chip in that in US, right, every state has different laws for tenants and landlords. So first thing you need to do is obviously you need to ensure wherever you invest, your laws are friendly to you as a landlord. All right, so don't go for where you like to go as a tourist. Really do it with data-driven research. And then after that, we mentioned around Midwest, around South. I mean, these are generally where we see there are good rent to price ratio. So there's just too many cities that can work. So in our class, we teach you how to find it so that you can choose the city that best meets your individual goals. Because some people are like, okay, I don't mind more vacancy, but I just want a lower cost property. Some people are like, I want it to be as hands-on as possible. I want the best tenants in. I don't mind a lower cash flow. I pay a bit more. So it really depends on what is your personal investment goal. And this is the principles we teach, is to allow you to choose the right city based on, we just can't circle. It's just different for everybody.
Wow. There's a lot of questions. Let me get to some of these. Okay. Okay. So this is really important. So, what you offer is very unique. How do we make money? Banks don't do these loans. I assume there's a risk premium. So there's a common misperception that if you need a mortgage, you go to a bank. It's of course. But did you know that in the US, 70% of all mortgages are through wholesale lenders, not banks? So the JP Morgan, the Chase, the Wells Fargo, those are only 30%. Those guys are focused on US citizens, primary residents, based on income, for the things that Tracy said, because those are regulated loans, they're heavily documented, and they have a subsidized rate to promote these primary residents. Now, if you go to so because they're wholesale lenders, they have to use a mortgage broker interface. So if you go to the US, 100% you would have to use a mortgage broker, which is us. So what we offer is exactly the same as you would find at a mortgage broker in the US, except the difference is that the type of client that you are is all we do. And so we understand the nuances of international borrowers. And the mortgage broker in the US, you're like 1% of what he does. So he may not even be motivated or understand your type of borrower situation. Is there a risk premium? I'm not sure how to answer that. Classic mortgages, you would never be able to get anyway, because you're not US citizen, you're not there, you don't have W-2 pay slips. So I guess there is a slight premium, over existing US citizen rate living in the US. But because, these loans, the mortgage rates, sorry, the rental income is covered by, the rental income is over the mortgage payments. Actually, lenders love these type of loans. And I wouldn't say they're undocumented. I mean, there's some information that needs to be asked. I'd like to invest in commercial properties. Do you guys provide guidance on what are the best areas to purchase? Help calculate the return on investment. Okay. So we write a lot of content on this. We do, you probably read our newsletters. We which are the best states in the US, which are the cheapest states, which states people are moving to and why. In fact, last year we wrote an ebook, super detailed on population growth, rental income, all those type of things. Han and Tracy have perfected their method. I'm sorry, I'm kind of stealing your thunder a little bit. Han and Tracy have perfected their way of doing things. But like anything in life, you have to do your own research. And there's a lot of information. We can guide you on what to do first and where to look for this information. And we're happy to do that. Some countries have a lot of issues with contractors, bad quality, impossible to find contractors due to resource. Yeah. So, like Han and Tracy said, your contractors, your plumber, your electrician, a lot of these guys you have to treat as your team. These are your kind of outsourced employees. Some you'll get right, some you'll get wrong. If if you don't find a good one, there's others. But your property manager will be the one doing this, right? They're doing the bulk of this type of heavy lifting. I'm a Canadian citizen with a real estate license from Canada. Can you recommend both residential and commercial realtors? Yeah, sure. Definitely. And everybody on who's asked questions will be given a personal, email after this. What are the tax implications for capital gains in America? What are the tax implications of rental income? Is it best to buy under a company, a personal name for legal financial benefits? Okay, so tax implications, we prefer to have our tax accountant give you that advice. And so after this call, if you want to drop your email, we'll do that. Many, if not most, use an LLC to put the property under for financial and liability aspects of it.
Maybe I jump in over here on the capital gain tax portion. So there are a few ways capital gains, there is capital gain tax. Having said that, there are we all know that the tax code is written by the business people through the lobbyist. So there's definitely ways to go around it. So there's one way, you can take a look. Obviously, the best thing is to talk to your tax advisor or talk to Donald's tax advisor, but you can take a look at 1031 exchange. It's a rule that allows you to reinvest your money without being taxed upfront. You defer the tax into the future when you decide to quit the real estate games. That's one way. But I think there's another way to sort of avoid capital gain tax is by you don't sell the property, but you still get to monetize it. How? You call Donald. You get a loan through a refinance, and that's how you monetize it. Yep.
Cool. What are the expense and costs we expect to owning a property in the US? What are the expense or costs? You guys want to take that one?
Okay, it would vary, but I tell you, the main ones, obviously if you want to start an LLC, then there's some setup costs, right? To start your LLC, get your tax ID going. Everybody will need a tax ID if you want to start earning US rental income, because you need to file income taxes in the US. If you're talking about operation costs, then you have things like your property management fees, property taxes, mortgage, your landlord insurance. Of course, always set aside buffers for repairs, for vacancies, right? In case you don't get it tenanted straight away. And for if you're buying multi-families, or depending on what is your lease agreement, whether you need to pay for utilities or the tenant pays for utilities. So these are the common operating expenses. And then you talk about business, like business overheads, things like your tax accountant, your US phone line, like to get a US number.
Bookkeeper.
So these are
Bookkeeper.
the
Yeah.
normal operating expenses that you will be seeing.
Cool. The question, are you all mortgage brokers or lenders? So we're a mortgage broker. We're the only mortgage broker outside the USA. If you go to the US, you would have to use a mortgage broker. So everything we do is exactly the same. I don't want to get ahead of ourselves, but actually, as of December, we have been approved as a US mortgage lender. We haven't launched it yet. So with a balance sheet to lend on the programs that we mentioned earlier, but American Mortgages is a mortgage broker. How many properties do you have, Donald? US. Can you do everything fully remotely? Yes, Han and Tracy do everything remotely. Do you finance multi-family apartments? What if rental income is equal to 25% of down payments? Can I use it as equity? Can you finance more than 3 million? Well, these are the type of questions we like. So we definitely can do multifamily. The down payment depends on the property value. We have a specialist that handles this. We've actually financed as much as $112 million loan on a multifamily property. Any specific things? Okay. Go back to the top. Okay. You know, if you only have 60,000 to spare, is it not enough to buy a 2-bedroom single-family home in Houston, Dallas, Texas, or where will you buy? Of course, you can acquire. Maybe I won't use that wording. Of course, you can acquire maybe a not so nice home in the middle of nowhere for cheap, but you'll need to contend with no renters and hack and flip. What would you do if you have no experience in U.S. investing? You know, it's kind of like any type of investing. It's whether it's a stock or crypto or, you know, whatever it is, there's a certain investing style that may not be suited for everybody. When I buy stocks, I can't buy value stocks. I'm not Warren Buffett. I have a certain way that I feel comfortable with. Forced appreciation is what Han and Tracy feel comfortable with, and so they've mastered that specific technique. Now, you know, of course, there's always going to be renters that don't pay and all these type of things. But these are things that you can actually minimize the risk of by doing research, right? And that's just part of the process. It's not just about finding the cheapest home. It's about doing comp researches. It's like buying a stock. You know, would you buy, you know, the same stock if one has a lower PE and one a higher PE? You know, each type of investing has its own research that you need to do, especially if you're looking for, you know, you're looking at rental income. And there's lots of, there's lots of cities in the US, honestly, that are just incredible investment opportunities. And these are all things that you should contact me. We have a lot of research on these type of things. Yeah, cash out answered that. Definitely cash out. We do. It's what Han and Tracy do. The loans you're offering are very unique. How does American Mortgages make money from the loans? Or just a trailing commission of 1 or 2%? No, there's no trailing commission. We're a mortgage broker. It's a one-time fee that's paid at funding. As a mortgage broker. So the question is, the loans you are offering are very unique. How does American Mortgages make money from the loans? Is this just the standard trailing commission of 1 or 2% from the lender or the borrower? Banks don't give out some of these undocumented loans. I assume there's risk premium. So as a mortgage broker, there's no trailing. Nowhere in the US has this. It's a one-time fee paid out of escrow at closing, paid by the borrower. I'd like to invest 500,000 in NNN commercial properties. We'll contact you directly for this. Do you guys provide guidance on what are the best areas to purchase and calculate the return on investment? Yeah, so I think maybe Han and Tracy want to do this one.
Yeah, I'm not sure if the question was for American Mortgages or for us, but
Yeah, I mean, it's sort of like, again, you have to do your own research. Best areas to purchase, it really depends on your, what do you want? Do you want, your budget? What do you want? What do you feel comfortable about? Some people will forego a little bit of return to be able to fly directly, right? Some people will want, to forego a little bit of rental income. Maybe it's because it's near a school. So we really need to know what your specific requirements are. Then you go look, and we can help you with that thought process. And do you help calculate the return on investment? Yes, I mean, we can give you the formula. It's fairly straightforward. I'll contact you directly and we can discuss this. Okay, we went through that. I need some questions for you guys. Yes, do I do that? Answer this. I can answer this, but I'm gonna let you guys answer this. Do you use an LLC as the legal entity to own properties? If so, do you have any insights on what state to incorporate the LLC, or do you own the properties in your names directly as individuals?
Yeah, so we do own LLC to hold the properties. There are a few different school of thought. Some like to do, the multi-layer one where they go set up one in, let's say, Delaware or Arizona and those, because they have the LLC setup there have a bit of special protection. That's one way people do it, but that will add up on a lot more cost, and that's something that we probably would suggest only do it when your entity gets very, very big. It's become like a conglomerate like that. Then you need more. You may need to pay a bit more to have this kind of added insurance and protection. We do directly incorporate at the state that we do the business in, where we buy the rental properties in, because then when you set up, then you become a legitimate entity within that state to operate. It's not right to set up a LLC in a different state and then buy a property in a different state. Then you are not like a legit entity that's doing business over there. You're not properly set up. Similarly, if you are from another state, your LLC is from another state, and you do business in a different state, then your tax reporting will be a little bit different also. So there'll be complications involved. Not say complications, but there'll be a bit more steps to go through. And to us, we are trying to simplify as much things as possible, so we don't go through or we don't do all these things. So basically, go decide on where you want to buy your properties, and then set up, incorporate your LLC in that state, and then you can do business over there already. What is the other one? Yep, I think I answered the three questions with that.
And we just last week published on our newsletter a long explanation of LLCs, how to use it, and the benefits. So we'll make sure you get a copy of that. Okay, what are your fees, and do you handle assist with real property taxes that we need to pay in the US? I'm not sure exactly, in terms of how to pay real property taxes. That should be paid out of your US bank account that we can, advise you on how to set one up. So in terms of fees, standard broker fees in the US at anywhere you go is 2%.
I think the property tax. So what we understand or what we experience is the property tax. So what they do is the lender will escrow landlord insurance and property tax. So we are paying principal, interest, and escrow, which includes your property tax and your landlord or your residential home mortgage insurance, whatever it is called. So we pay these four components in every single month. And then a part of it will be P&I to pay off our interest and our principal. Then they will keep the escrow amount as it accumulates over the few months. And then property tax typically are paid twice a year, one at the start of the year, one in the middle of the year. And then the lender will then use this amount to pay off, to use the money in the escrow amount to pay off the property tax. That's what I understand. But I think there are arrangements, I'm not sure, but there are arrangements where you can don't pay the escrow. You do the P&I only, and then you pay the property tax yourself. But that is not something that I've experienced before, but I heard of it before.
Yeah, I think, I'll add to that. That's a fantastic thing about US mortgages. The property tax and any insurance is added into the mortgage payment, and the mortgage company pays it for you. Okay. How much does an independent appraisal cost, and is it for both the value of the property and rental appraisal? Yes, assume $500 to $700. How many properties do you have, Donald? Well, that's kind of a personal question. How much okay. So what are your initiation expenses? I found between high setup costs and higher interest rates that non-bank sources are just too expensive to use. Yeah, so let me explain. So 70% of all mortgages are in the US are through wholesale lenders. So these are banks that don't take deposits. And it's all about making the numbers work. There's no difference from what we're doing than in the US. So it's all standard practice. You know, let me just take a step back. My co-founder and I, we founded this company. You know, most people who open any type of business, you're addressing a problem that exists and you're trying to fix it. You know, you want to open a burger restaurant, you say, well, in this neighborhood, there's no burger restaurant, so that's a problem. So I want to fix it by opening one. The problem that we identified is that it was difficult to obtain a US mortgage overseas. And so the fact that we're able to do this is because there's a lot of hard work. We took 4 years to kind of get to this level. And you know, and quite frankly, banks around the world are actually not wanting to lend. So it's a misconception that you know, actually most mortgages in the US are through what they call non-bank sources. I'll give you an example. The biggest mortgage lender in the US is called Rocket Mortgage. You could Google them, but they're not a bank. I mean, they do so much mortgage business, more than any traditional retail bank with deposits. So PennyMac, Rocket Mortgages, these are all wholesale lenders. These are all non-bank sources. And in terms of too expensive to use, you know, obviously Han and Tracy, you know, you have to make the numbers work. So, you know, you have to sort of, you know, do some homework, and, you know, this is stuff that we can also help you with. Please email me. Thank you very much. Okay. Well, I think, okay. Tracy and Han, do you do the property fixing upgrades yourself, or do you do it remotely via a contractor?
You want to say, Tracy?
We would recommend you do it. No, we do it remotely. We don't fly there and fix up our properties. So we do it remotely. Your property manager can do it for you. If it's a very, very major renovation and it's out of the expertise of your property manager, there's a lot of general contractors you can get. How do you watch over them? It's just like how you watch over any project going on, right? You need to have a timeline, a contract. Week 1 finish what, week 2 finish what, have photos, have video calls with them, go through the progress over maybe every week or so. You go through the progress and then split your payment into payment milestones, progressive payment. So that's how you manage your risk. I think it's probably the same managing any project that is overseas or remote. So just manage your risk. And yes, we don't fly over to do it ourselves. We use technology is so good nowadays, right? We can video call photos and everything. Yeah.
I
Do
think
you have to go on?
yeah, I think ultimately is what kind of lifestyle that we want. I think there are really a lot of type of investments, crypto, REITs, stocks, and all those gold, forex. I think we pick this asset class is because we have a vision of our lifestyle that we want to retire early. We want to travel the world, and we want a type of, you know, the kind of time freedom that allows us. So we deliberately design this whole thing such that we are able to remotely, obviously there are people that wants to roll up their sleeve and go and do all the hard work and save the money, but we as I mentioned, we design it this way. So we really you know, came up with the processes to make sure that it is remote, right? So we have, you know, boots on the ground that can help us to verify certain things. We have different layers of checks independent from each other, so that, you know, not everybody is trying to work for one person, but, you know, everybody is working for themselves and for me, so that, you know, I can always ask one person to check on the other person's work, so to get all these things done. And things like, do we want to fix it ourselves? I think there's a lot of things like, first, of course, I mentioned I want to travel the world. I don't want to fix things myself. But secondly is I don't have the know-how to go and do it myself. I mean, I can Google, I can try to frame the question, and then after I Google to find the solution. But in the end, that is just me trying to vet the contractor to know how competent is he when he describe to me how he's going to solve the problem on hand. Yeah, so that's just a long answer for this thing. Basically, we deliberately design this whole process so that to allow us the lifestyle that we want.
Yeah, and it's not sustainable to keep on flying there to fix. I mean, imagine you're scaling to 5, 10 properties. It cannot be you're flying there 10 times a year to go and fix things. And like we said, right, I mean, there are expertise involved. Things like electricals. How do you rewire stuff in the house? I mean, that's clearly not our expertise. So we might as well pay the pro to do it. But at the same time, we always have an eyes on, hands off approach to know what's going on.
Yeah. Good
But
Yeah, one
answer.
more thing. Sorry, I forgot to add one more thing. That's the most important thing. So we deliberately when we select our cities, we deliberately project numbers to be able to pay for all these intermediaries to help us solve the problem without us doing it ourselves. Similarly, when we do our due diligence on the specific asset itself, we also cater for buffers for contingencies. We allot all these amount that so that if things happen, we know that this is the amount that we are going to use, like reserve basically to go and pay for all this work to be done. So we are not at the borderline whereby we really need every dollars and every cent. So we really buffer all this into our projection, our pro formas, and when things happen, we are not we are like okay, call and get someone else to go and settle it. We budget for all this inside already.
Good
yeah, I
question.
think since we're on this, I saw that there's another question to say, are you worried that contractors will take advantage and overcharge you on materials? So actually, you can just go to Home Depot or Lowe's website and search how much it should cost. Right? Don't be afraid to negotiate. Like let's say you go onto the Home Depot. Home Depot is like their courts or their Harvey Norman like that. There's a shop that sells a lot of home supplies. So it's all online, right? You can go to their website online. Let's say you want to buy a refrigerator and you go online, you see, oh, refrigerators cost, you can get a lot at maybe $400, and then the contractor come and charges you $1,000 for a refrigerator. You can just print screen show him and say, hey, Home Depot is selling only 400. Why are you buying it at 1,000? And really don't be afraid to do that. They are more than willing to listen to you and negotiate on your terms. Or in fact, you can even say, yeah, see Home Depot this model, you just go and buy this one. Yeah, so it is very flexible. So that's why we always say eyes on, hands off. It is not totally everything off and let them just do everything and slap you a check at the end of it. Slap you an
Yeah.
invoice at the end of it, not a check.
Another thing
So
that people do is you can actually buy the refrigerator, have it delivered, and then have your handyman actually take the refrigerator, pay him a little bit of money, open the box up, throw it away, and put it in the kitchen. It's so transparent, these things, and
So
so
many ways
efficient.
to do it. Yeah.
Yeah. So there's a
and I want to add is that yes, definitely worry about this Effie's question that Tracy was trying to answer. So Effie, one more thing is there are yes, there's always contractors that will possibly cheat you, but I think you can always get referrals. Because if that person refer, let's say you ask me like, hey, Han, I need someone to do painting, and I refer to someone to you. I wouldn't refer anyone to you. I'll refer someone that I trust, that I have worked with, and I'm comfortable with giving you if not, if anything happens and things don't go well, you will blame me, right? So I will definitely, and when I refer, I will definitely call the person and say, I'm going to refer this someone to you. And then I will of course tell them, please take care of this person, right? And so if this goes well, I can always have trust that I can refer the next person to them. So I think this is a thing that we do try to advocate, in the sense that do try to verify. You can do Google reviews. Google reviews can only go so far, but really talk to practitioners, talk to people in the city that are doing the same thing as you, and then after that ask them who they're using. Then with that, then I think it doesn't eliminate the risk, but it reduces the risk. So that's what I want to add. Thanks.
Yeah. Okay, so another question is, do you have to file 1040 in our tax forms? So it seems like you're quite informed. So you are required to pay US tax, but the amazing thing about the US is that as a foreign national investor, you get the same tax benefits as a US citizen. We have amazing tax advisors to refer to, and And I think one thing I'd like to add is with the right CPA, education and structure, it's possible to not pay taxes, So we can, there's just so much strategies that out there to work for you. How does refinancing work in terms of timing? Is it realistic to refinance over 12 months, et cetera, and costs? For example, my financial situation changes or the Fed reduces interest rates quickly by 1.5% over the next 12 months. Okay, so refinancing, most loans will have a prepayment duration, which can be negotiated by, we help you negotiate that. It's usually 2 years, but you can, buy that down. And these are all things that, we can help you analyze and kind of structure the right program for you. US Fed funds rate. So, people think mortgage rates are Fed funds rate. They're actually unrelated. Fed funds rate is the rate that banks borrow from each other for short-term liquidity. Now, it's somewhat correlated to mortgage rates, but it's not a driver of mortgage rates. But yeah, so, I think this is what Han does, right? Han and Tracy, they buy, refinance, and, their strategy, but refinancing is a big part of what we do.
No, I think there's one question is how fast can they refi? I think there was one question. Since you're on this.
Yeah. So these take 30 to 45 days. I mean, if you use bridging loans, they're much faster. If time is sort of the priority, and those can be done in a matter of weeks, but any standard loan takes about 30 to 45 days.
I think what the person is asking is after they buy, I believe all cash, how long does it take for them to be able to do a cash out refinance?
You probably need to hold the property for 6 months if you want to use a new value.
Okay.
I think, well, okay. So, yeah, I think we're going to, yeah, I think we're done. We've answered all the questions. So why don't we do this? We'll do a closing. First of all, from American Mortgages and Global Mortgage Group, I want to thank everybody for, tuning in. It was a lot more signups and engagements, which we really like. And I want to thank Han and Tracy for joining us. And I encourage everybody to sign up for their webinar. I've joined it. I've learned a lot. These guys, have a great strategy, and they're super friendly and approachable. So with that said, I'm going to leave Han and Tracy to kind of, send this off in the right way.
Send this off. Yeah, hi. Thanks so much, guys, for spending your time with us today. I know that it's a very new topic in a sense that even when we started, we did not know, even up to today, we don't know anybody else from Singapore doing US real estate investment on this kind of scale, like to make it your core business and also to gain financial freedom from there. So we obviously, when we started, we received a lot of negativity of people doubting us. So the fact that you even bothered to spend your time here to listen to us, we really, really appreciate that. Again, we do have the free webinar coming up on 31st January. So feel free to join us again where we can share more information about US real estate. At the same time, any questions you have, just feel free to email us at admin@bitesizedinvestments.com, okay, or on any of our social media, Facebook message, Instagram message, anything. So we are really happy to grow our community and to connect with more like-minded people like us. So thanks again so much for being here.
Great.
Yeah.
Oh.
No, that's fine.
No. Yeah, so
Good.
with that said, for those of you in Asia, have a good evening. For those of you in Europe, thank you for waking up and listening to us. And for those of you in between, thank you for, this engagement, and look forward to hearing from all of you.